Hey everybody, this is Jim at SP500chart.com. It's about 2:40 on Sunday afternoon, November 10th, 2013. I thought I'd watch an NFL pro football game today, but instead I decided to watch the Atlanta Falcons. That said, I'm taking a break. It's halftime. They're getting killed. And let me read this to you, then we'll get right to it. The website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. Far from it. I'm just a guy who draws lines on charts. So let's take a look. Okay, we are looking at a 4-day chart. We usually don't do this. But I want to show you a couple things that I think are very relevant. And I want to show you why I think this market has the makings to go significantly higher. And the main reason is this. Here's our March 2009 low. Here's the low we had in the summer of or early fall of, actually I think it was, of 2011. And then we have another low right here in late 2012 in November. That's the one that we are operating kind of on right now in our channel, which we'll also take a look at. But we've drawn a trend line right here, this blue line. And guys, I think this line needs to be watched. If this line breaks, then it could be the sign that this big party is fixin', as we say in the South, fixin' to be over. Now, we also have this red line, which is kind of a secondary thing, but it's still there. We could even say that we had a tag on that in very early summer of 2009, certainly mid-2010. Got under it for a little bit in 11. Touched it in 12, touched it later in 12, and haven't touched it since. Interestingly, if we create a parallel line to this, it is exactly lining up with this line right here that has two touches back in 2010 and 2011. So all of that to say, to be frank, it's a little bit ambiguous which of these is the real important line. But because we're over both of them, I think we have to say this market is still in an upwards trend. Additionally, this red line is drawn over the 2000 tops and the 2007 top. That line is currently at about 1600, and here we are, 170 points. We are more than 10% over that line. I think that is significant. Now I want to say something real quick, but before I do, here's my commercial break. Guys, if you're watching this video and you are not a subscriber to SP500chart.com, this is what it means. It means you get to watch every video that I do throughout the week, but it's released to you a week late. So if you are watching this on a Sunday afternoon or a Sunday evening, you'll notice that I've also released the videos that were done on Monday, Tuesday, Wednesday, and Thursday. Great. You get to see those in hindsight, and you can look at them and say, is this stuff worth anything at all, or is it just a bunch of hooey? If you think it's worth something, then ask yourself this question. Would this have helped me in any way looking at what took place in the week if I'd been watching these videos after every day's close? Would this have been valuable for me to factor into my own thinking, to my own thought processes, to my own style of investing? Would I have learned anything from it? Now, obviously, you are on your own. It is your responsibility to do the right thing with your capital. But these are old school, tried and true techniques that have been working for decades. And though I do not say this is investment advice, if you take what we do here and apply it to your own thought processes, in other words, take ownership of it, would that have been of any value to you? I don't know. Just think about it. If it is, then go to SP500chart.com consider signing up. It's really cheap. It's less than $1 per video. So anyway, let's look at this. Now we're looking at a one-day chart, and you can see here's our trend line that's been working off of our November 2012 lows, and we've got a number of tags on it. Got under it just a little bit, but now we're well over it. Additionally, we've got this blue line right here. You can see that this blue line had been holding the market in check. And we could even extend this back a little further, though it doesn't match up perfectly. It's pretty close. This blue line had been holding the market in check for about 4.5 months. Then we got over it. And this week, we broke down a bit on Thursday. But what happened on Friday? We bounced. And Thursday's video talks about the setup that looked. There were 3 reasons why we could expect a bounce on Friday. I'll go over those again. Let's look at a 15-minute chart. Okay? The first reason is this. When we broke our rising blue channel right here, we did so in a pattern that was constricting a bit. It looked a little wedge-shaped. To be frank, I think this breakout right here on the 4th was probably premature. But we broke down, back-tested, got up, hit the 1775 approximately, a little less, hit about 1775, and then bounced off of that hard. And when we were looking at the chart on Thursday, I said, you know what I see here? And again, I don't, it's hard to make a real super strong call. I said, but we got 2 things going for the market right now. Well, actually 3 things. First is we have another back test of this line that was broken on Monday. Okay. Secondly, we've come back now for a back test of that blue line that I just showed you across, not 2 day, I meant 2 hour. It was drawn across these tops. We came down to that again. And then finally, the trading that took place throughout the day on Thursday, let me flatten this out just a little bit more so you get an even better look at it, took place in a descending wedge. And we know that descending wedges have a tendency to produce an upwards move as the wedge gets smaller and smaller because selling interest becomes less and less. So when we were up here at 1775, there were a lot of sellers. We're going to sell. They took the market down, roughly 18 points in this initial wave down. Then buyers came back in, took it up to 1765. Well, they took it down 15 points. Buyers came back in at about 1755, and the next time the sellers could only take it down to about 1747. So these waves keep getting smaller and smaller, and that just reveals that there is less and less interest in selling. Now, we broke out over that top line on Friday, back tested, and then immediately started to trek back up. And here we closed on Friday at 1770. As a matter of fact, not only are we now over this line, signifying an end to the short-term downtrend, we are approaching that 1775 level again. And I don't want to speak out of turn, but I believe 1775 is an important resistance level in the S&P, and I believe if it can be broken, that we should be looking at now a move, I'm going to say it, to about 1800. I had been saying the 1780s, but as you see, what we do is we measure the depth of whatever develops underneath that horizontal resistance line, and if we were to say hit this week and then dip back down a little bit, at some point take out this line, then we would expect to get over that line about the same height as the depth that took place underneath it. And that would take the S&P to about 1802, 1803. So, I think in general, we knew coming into this week that when we broke this rising support line here, that we knew that when we break a line, it breaks either to reverse or to consolidate. And because all of these lines have been really moving up at a very steep rate of ascent, it's pretty safe to say that it's hard for those to be sustained for any length of time. We need a breather from time to time. And I believe this is likely what we are seeing right now, is the S&P needed a breather. Let's see what transpires this week. My hunch is, now keep in mind, this is speculative. We do not have a completed pattern. We do not have a breakout. Okay? But I'm going to change the color of this line right here to purple, because that's the color that I use for necklines of various head and shoulders patterns. I'm open to the idea that we are developing an inverted head and shoulders pattern here. We had a small inverted pattern right here that failed to meet its target. It would have needed to have gotten up to 1782. But the fact that you've got a small head and shoulders that failed still carries with it a little bit of bullishness. And I want to explain very briefly why. What is an inverted head and shoulders pattern? Well, they typically either form at bottoms or in consolidations for a continuation pattern. And what happens is you end up with a first wave of selling pressure and then a rally that takes you back to the previous level that existed before that selling, then a deeper wave of selling, and essentially that lets off, if you will, more steam. And if you can rally back to that same level, folks, look at it like this. To move from 1752 or 1753 to 1774 is a 21-point move. To move from 1747 to 1774 requires even more buying interest. And if we then back off from that a little bit and do it again, what this pattern ends up doing, it ends up turning net selling into net buying. And when you know that has happened is when you take out the resistance line, and in this case it's at about 1775. So coming into this week, I really don't have any great super feeling about what's going to happen Monday or Tuesday. I suspect we'll get up to this line on one of those days, but my feeling is more the general sense of what may take place in the week. And what I would like to see is for the S&P to stay above this line, certainly above this one, but ideally above this one and under this one for a bit, then take this out, and I believe we will get a move out of that pattern to in excess of 1800 in the S&P 500. So look, if you're looking at this on a Sunday afternoon and you're saying that sounds great, I would like to see a video update on Monday, Tuesday, Wednesday, and Thursday, just in case something changes in the chart, or just in case something needs to be confirmed in the chart. Folks, it's $19.95 a month. You spend more than that on 4 premium coffees at Starbucks. Okay? So think about it. Go to sp500chart.com, check it out. you get the benefit of seeing in retrospect every video I've done on the S&P 500 for the past 3+ years. Go all the way back to when the S&P was in the 1200s. And by the way, there were a lot of bears at that time saying this is it, this is the top. And I felt at that time almost like the lone bull saying, no, it's not. This sucker's going higher. So guys, think about it. It's www.sp500chart.com. Check it out. So there you have it. That's your video for November, actually the week ending November 8th, 2013. Thanks for watching. And if you are a subscriber, thank you so much for your support. Take care.